Hi everyone, so if you're new, well, I'm glad you found my channel. What I try to do here on my channel is explain that investing in the stock market is more than just buying a company you love and that's it, and thinking it will go to the moon. There are a lot of people who are going to get crushed by this mentality, and I'm trying to avoid this. Look, maybe you are a little concerned that something just doesn't feel right about all the hype around Bitcoin or Tesla. Well, you're not alone. My strategy is to look at an investment based on its financials, just like we would if we wanted to buy the entire company and run it ourselves. And today, I'm going to do a quick high-level valuation of Nintendo to see whether it is worth spending some serious time researching the company. Now, I'm not doing a full analysis here. I don't have the time to seriously analyze the thousands of companies out there, so I'm trying to filter as many of them out as I can using this method. Even if the company passes or fails this quick valuation, it doesn't make it a good or a bad investment. It's just a way to motivate me whether I want to go onwards and do further research and study the company in serious detail. So you can just sit back and follow along and learn how to do this yourself, and we will by the end of this video have a target buy price. This is part art and science anyway, and the more practice we do, the better we're going to get. So the reason I'm choosing to do Nintendo is I read the earnings report and, well, look, the stock price got hammered straight after this report on slowing sales and things like that. Well, it has been a year since the pandemic started, so it was going to be a little bit tricky to keep up with those epic numbers that they did last year. So I thought it'd be a good opportunity to go look at a high level look over this company. We're going to do quite a quick valuation. We're going to go through my 9-point checklist, and then I'll give you my opinion at the end as well. Okay, so I guess it's important to look at the future growth opportunities so we don't get stuck into the quarter by quarter earnings and things like that. We want to see sort of like a 5-10 year projection here of what's possible for the company. Now, I think this is what I think the growth opportunities are for the company based on my research. So I think, well, when Super Nintendo World locations open up throughout the world and people can go back to theme parks and things like that, I think that's going to drive a lot of, well, not only just revenue for the business, but it's also going to cross-sell their merchandise and get children really loving the Nintendo brand, just like we did when we were children. So I think having like actual physical locations for people to take their children is a pretty cool idea. The retail stores, now actual physical retail stores, they've been slow to roll out so far, but they've been a massive hit, especially the ones in Tokyo where the lines were hours and hours long for people to trying to get into the store to look at the merchandise and the games and just have that nostalgic feeling about the Nintendo brands. So I think the physical retail stores is a really good opportunity for them to just make more money. Films. Super Mario movie 2022 is when it is due to be released. Again, if it's a hit, well, this is going to drive sales through all of their different products. Look, it could be a failure, so I'm not really sure on this, but it's, well, look, it's not really going to hurt their brand. It's only going to hopefully be upside potential. There are more hit games coming out, like The Legend of Zelda. There's sequels to that coming out, and they're actually scheduling in to do more share buybacks too. So there's lots of ways that I think the business itself is getting better. All right, let's do the high level stuff now. So the first thing we're going to look at is revenue growth. Now, revenue is simple. We just want to see the business getting better over a period of time here. 1 year is not really going to cut it. We want to see it sort of over like a 5, maybe even 10-year period. And this is what we just hope that our investments get better in the future. So I go and have a look at the revenue numbers, and from, I don't know, even back in 2012, it was 647 billion, and now it's around about 1.7 trillion. So it's definitely got revenue growth. The last 5 years has been exceptional. Now, people will comment that this business is quite cyclical because they release new devices every 5-7 years, like the Nintendo Switch or the DS or things like that in the past. And then they get like a big influx of sales in that period, and then it's sort of the cycle sort of drops away again until the new console comes out. That's sort of what's been happening with Nintendo so far. But I think they're stronger than that. I think that they're actually not as cyclical anymore. So when we do the valuation of this, I can sort of try to project out the future on average growth rates, but I don't think it is as cyclical as it once was with all these different revenue opportunities. So Revenue is definitely a tick in my eyes at the moment. It's definitely been growing. Gross margins. Now, gross margins is important because we want to see if the gross margins are improving. It means they're having pricing power. Their business is getting better, essentially. So as we can see from 2016, it was in the 40s, like high 30s in the 40s, and now the last 12 months it's been closer to 50, and even 2021, the year ended, was actually 55%. So there's definitely improvement there. That's really all I need to see. I'm very happy with that. Return on invested capital. So this is the ability for the management team to invest their money back into the business and get a return on that. So this is how we're going to measure, I think, long-term success, is the ability for the company to reinvest, grow the business year on year. That's exactly what we want to see. So how I'm going to check for that is I scroll a little bit down and I find, well, from 2018, it's been 10, 13, 16, 27, which is really strong. Anything above 15% is really great. But if we look from 2017 back, it was actually really low, like single digits and close to zero. So the last 3 or 4 years has been great. Something I'm going to keep an eye on. Again, maybe this is a sign of showing that cyclicality. I just don't think that's going to continue the cyclical nature. So I'm actually pretty confident that these return on invested capital numbers are going to be strong moving forward. But something I'm going to watch out for. I'm going to give them a tick for now, but that's something I'm going to keep an eye on. Now we turn to debt. Now, debt is the #1 reason that companies get into trouble. And when we look at Nintendo's debt, well, they have fantastic debt metrics. They have pretty much zero long-term debt whatsoever. Their current ratio is a 3.84, which is very strong. So they have a lot more current assets than their current liabilities. They're not in any financial trouble whatsoever. Honestly, this is actually one of the strongest companies financially speaking that I have seen, because they have no long-term debt, like zero, nothing. They have all of this cash in the bank, which we'll see a little bit later, and no debt. It's fantastic for us as shareholders because we don't really have any risk of them going into any sort of bankruptcy issues whatsoever. They have plenty of cash. Okay, so debt's fine. Free cash flow is the next thing we're going to look at. I really like free cash flow. That's how we're going to value the business a little later. Free cash flow essentially is what's left over after the business has used their money to maintain the business and to grow the business, and what they've got left over is what we call free cash flow. That's what gets essentially returned to us as shareholders. They can put it in the bank, they can pay dividends with that, they can buy back shares, lots of things they can do. This is how we get rewarded essentially. So I look at the free cash flow here. Okay, so here is the last 5 or 6 years, and it's a little bit lumpy. Back 2015, 2016, 2017 was really low. They're obviously spending a lot of money this year, but since then it has really taken off. 2021 is 605,000 million. So what's that? 605 billion yen in free cash flow. That's fantastic. Now, something we need to know about free cash flow. When I was reading the Nintendo report, they are very confident that this 605 billion yen free cash flow is going to come down maybe 20-25% in the 2021-22 year. Because of the pandemic, it had a massive increase in sales, and everyone was staying at home. They wanted to play games. They wanted something to do, but that's not going to repeat itself. So I'm going to take off around about 20-25% off this number for my free cash flow number that I'm going to work with moving forward. But free cash flow, as you can see, has been growing very strongly over the last 5 or so years. Fantastic news. Now we're going to talk about brokerage accounts. Now, I really think Interactive Brokers and Saxo Bank are the 2 best brokerage accounts out there. Robinhood is not a good brokerage account. It is not stable. It doesn't have a long history. It doesn't give you access to international markets. And look, I think it preys on people's gambling nature, and they're trying to get you to overtrade because that's how they make money. Interactive Brokers, Saxo Bank, they want you to be long-term investors, and that's how the platforms are set up. Now, the fees for Interactive Brokers, I think, are superior to any other platform out there. They are the best one. It's the one I use both of these. Interactive Brokers is probably my preferred because they've actually just taken out the monthly fee as well. Look, please get yourself a good brokerage account. They're not all made equal. That's just my recommendation. Okay, let's move on. Shares outstanding. Shares outstanding is simply the amount of shares that are issued out there in the world. If this number is getting bigger, it means we're getting diluted, and that's bad. If this number is getting smaller, well, that's fantastic because our ownership percentage is getting bigger. So we look at the shares outstanding. So from the last 8 or 9 years, it was about 1 billion shares. Now it's 950 million. So that's been coming down over time. Fantastic. We can give that a big tick. Great news. All right. Insider ownership. Incentives of management are really important. We want the management to be aligned with us as shareholders. Now I'm here on Simply Wall Street, and if I have a look at the ownership of the chairman, there's some of the directors and officers, they have, look, it's actually very low ownership in comparison to their compensation. They're making more in their salary than they do have stock ownership. So this is actually a negative, and I would give this a cross. The thing is about Nintendo is their culture. Now, I've done a lot of digging into this company, and just because I'm going to put a cross here in this section, it doesn't mean it's a problem. What I mean by that is the culture of this company has been so conservative and so focused and not wanting to reward. They really just want to focus on their customers first. That's the most important part of their culture. Shareholders come a little bit later down the value tree in terms of what's most important for the company. And I actually really like that. I know I'm a shareholder and I want to be rewarded for my investment, but the customer comes first, and that's going to be really important for a long-term investment. The culture of Nintendo is fantastic. I actually really like Japanese culture in general for this reason. So I'm giving it a cross, but I'm actually not too concerned here. Okay, super investors. Now, what I would normally look for is I want to see someone that I love, like Monish Pabrai, Charlie Munger, Guy Spear, a range of other value investors, really smart guys who have done exceptionally well over the past few decades. I would love to see them invested in the company as well, because it'd give me a lot more conviction. Now, there isn't any super investors that I love invested in Nintendo, so I am going to give them a cross. So that's what I have to do for now. Okay, now we look at price versus value. So price is by far the most important thing. Everything can be a good and a bad investment depending on the price. You're not going to spend $20 million on a Ferrari when it's only worth $250,000. That would be insane. It's a great car, doesn't mean you pay $20 million for it. That's stupid. So everything can be a good and a bad investment depending on this price. Let's go find out what we're going to do, how we're going to value this company. Now, I'm going to use my intrinsic value calculator. It's free. It's in the description if you want a copy of this yourself. Now, in terms of growth rates, what I have done for the growth rates is I've looked out over the past 3, 5, and 10 years. Now, they were having a pretty rough period going through not a great time between 2011, 2015 or so. So the 10-year average growth rates are pretty low. The operating income was 14%. The net income is 20%. The earnings per share was about 20% over the 10 years, but revenue was only about 5% on average over those 10 years. But if I look at the 5-year growth numbers, so the last 5 years, we've got 28%, 81%, nearly 100% for both earnings per share and net income. I don't think that's sustainable whatsoever. Let's be super conservative and say that, okay, even with all those growth opportunities that I think they have, let's say that the next thing that they bring out isn't a hit, whatever the device is, or the next movie, or the games, or whatever it is. Maybe they have a few bad years here. So let's assume that over the next 10 years, they're only going to grow at around about, let's say 12%, and then even slow it down a little further to 10%. Just remember, they've been growing at around about 100% for the last 5 years per annum, which is insane. So this, I feel, is very conservative. You can argue with me in the comments here if you don't agree with me, or you think I'm too conservative or not conservative enough. I'll let you argue with me there. My return on investment goal that I'm trying to get for companies is 30%. Now, I'm actually not trying to get 30%. I'm trying to get somewhere in the 20s. That's my goal. But I put it up to 30% because that's how I incorporate a margin of safety. Now, this is really important. This is how I stop being an idiot by making investments. If I have a margin of safety, it means that I can be quite wrong in a lot of my assumptions, and I still should get a reasonable rate of return on my investment. It's like the shoot for the stars, hit the moon philosophy. That's sort of what I'm doing here. Okay, the multiple I could sell it for a company growing at these speeds, sort of 12, 10%, you're probably going to get a fair multiple, a pretty mid-range multiple of about 15 after about 10 years time. Now, the operating cash flow minus maintenance capex, we're actually going to just grab the free cash flow number. That's an easier number to find. Now, like I've said this before, the free cash flow at the moment is around about 605 billion yen. Now let's do 605, makes it about a 5.5 billion US dollar free cash flow number. Now I'm not happy with that because I know that it's going to be 20-25% down this year, and the management team have already come out and said that's what's going to happen. I'm going to take their word for it. Maybe they're being conservative. It doesn't really matter. We're going to take their word for it anyway, and we're going to knock this down to, I don't know, let's call it 450 Japanese yen, 450 billion Japanese yen, giving us around about 4.1 billion USD. So that's what I'm going to use, and I feel like that's conservative, and that's a fair number to start with for my free cash flow. So shares outstanding, we just go and pull this shares outstanding number. Okay, so I've kept this in billions, so I've had to put it as 0.9453. Total cash, if I go to Yahoo Finance and I look at their total cash, they got 1.74 trillion in cash sitting on in their books. 1.7, I think it was. What was it? 1.74. So it's around about $16 billion they have sitting in their bank account, and they have zero debt. We're going to call it 15 just because, let's just be conservative. And they've got zero debt. So the price that I want to buy it at is around about $46. I'll be honest, anything under $50 here is probably fantastic considering I've been so conservative here with these numbers, and I've pulled that free cash flow down about 20-25% already. So I would be really happy with this number. $46, that's incredible. I'll be honest, anything under 50 is going to be a really good price here. So at the moment, if I go have a look at the price, it is 62, 67. That's not far away. Now, when you're looking at this, the price might be a lot lower than this. It might be getting close to 50. I don't know. 50 is my number. That's what I want to pay for this company. So you can check it whatever date maybe you're watching this in 6 months time. $50 will still be pretty strong, a pretty good buy price in 6 months time. All right, here's my overall opinion of everything so far. Nintendo have amazing financials. I love how much cash they have and they're no debt. Fantastic. Free cash flow was great. It's been growing. The return on invested capital has been strong over the last 5 years. Something I'm going to watch though. Their gross margins have been growing, revenue's been growing, fantastic. Now, insiders haven't got a big stake in the company. They're not aligned, but like I said before, I really like the culture of Nintendo, so I'm not too worried here. I wouldn't be surprised if Guru started buying if it got to about $50, just like I would be. Now, I already have a very small position in this company, but I'm really looking for this $50 number before I'm loading up. This will become a big part of my portfolio if I can get to $50. I think it's probably my favorite company, and it's my favorite alternative to cash, and maybe one of my best investments if I can get it around this $50 mark. They have a really long-term time horizon. They're very focused on building this massive big company that's going to be durable over the long term. They're conservative. Love the management team here. So that's my overall opinion of Nintendo. $50 is the number. Please do your own research into Nintendo. I have previous videos I've made about Nintendo, so if you want to go back and watch that to get that research going, please feel free to do that. Leave a comment if you enjoyed this video, hit the like button before you leave, and I'll see you in the next one.